Welcome to Wealth Science. I'm your host, Jesse Fuchsia, Army Ranger, real estate investor, and income enthusiast. On this show, we uncover the keys to attaining financial freedom. There are so many people listening right now who are stuck in that day-to-day 9-to-5 rat race. Luckily, it's only temporary. Each week, we bring on guests that help us discover the steps to build financial freedom, passive income, and generational wealth, so we can live the life we were born to live. Money is freedom. Let's get to the show. All right, welcome back to another episode of Wealth Science. I'm your host, Jesse Fuchsia, and today's guest is Jeff Cook. Jeff is a commercial real estate owner, operator, and investor in central upstate New York. He's the managing general partner at Cook Properties Fund 20. The Cook Properties Fund 20 is a private real estate equity fund of $26 million with the goal of acquiring mobile home parks and self-storage facilities in Massachusetts, New York, Pennsylvania, and Ohio. Jeff, what's going on, brother? Welcome to Wealth Science. Pumped to have you on this Sunday morning. Glad we could make it happen.
Yeah, thanks a lot. I appreciate it. It's always nice to get to the office early, relatively early on a Sunday morning. So
thank you. Yeah, no worries. We got a lot to unpack today. I mean, I've listened just for this interview alone. I've probably listened to, I don't even know, 8, 9, 10 podcasts that you've been on. So I've got a lot of great content. I'm pumped to jump into it. For the viewers who maybe don't know who you are, or maybe aren't from the Northeast in New York State, if you could just take a couple minutes and introduce yourself.
Sure. Yeah. So like you said, my name is Jeff Cook. I was born and raised here in Rochester, New York. I started my real estate career back in 1997 with a single family home here in Rochester. Got up to started buying more and more singles, doubles, triples, residential apartments in the city. Got up to about 100 units. Sold all those right around 2008, 2009, right before the crash. And then started moving into more commercial real estate. Bought my first mobile home park in 2008. We still have that today as 34 pads up in the North Country. Sandy Creek area, about halfway between Syracuse and Watertown. It took me a very short order, maybe a month or two, to realize how much I really enjoyed the mobile home park business model, and just started buying more and more parks after that. Right now we're up to, we just closed on some parks on Friday. Now we're up to 40 parks, 4,000 pads. And as you mentioned, we have another 2,300 pads under contract that are scheduled to close by the end of the year.
That is awesome. I think this is so cool, and people overlook kind of the niche of mobile home park investing. Like I'm curious. If we go back to like that 2008, 2009 timeframe, Jeff, what was that general draw for you to the mobile home park space? And I guess I'm curious why you and your brother got into it.
So I had apartments. They were all pretty much inner city apartments. So it was a lot of management. It was a tough go at it. I did it for about 10 years. And just decided I wanted to do something else. So I put them all up on LoopNet, and we had a gentleman from New York City that wanted to buy the whole portfolio. So I sold it, and I actually wanted to stay away from residential because I had, not that it was a bad experience with the apartments I had in the city. It was a difficult experience. So I wanted to stay more commercial. So I bought an office building in Rochester. Paid cash for it. It was right before the crash. So real estate was really tight and hot, and it needed a lot of CapEx, and it had a lot of vacancy. But I got a good deal. So I did all the CapEx. I paid about $400,000 for it, put another $300,000 into it, did all the work. And then the crash happened, and no one showed up to rent my brand new building. So I kept dropping the rent. Eventually, I got it to the point where we did attract some tenants. I filled it up, not at the rents I was hoping for, but nonetheless, we filled it up. And then I was approached to look at a mobile home park. And I was very concerned I didn't want to go from the quote unquote city poor to the country poor. So fortunately, this park was beautiful, still is, primarily a 55 plus park, built in the late 90s. And fell in love with it. It was such a easy management for us, and it was a lot different, of course, than the city apartments. The residents paid their rent on time. They took care of their units. They mowed their grass. They were just really good, normal people. And with that impetus, I was able to move forward and buy a lot more parks.
Yeah, and I love how you said from the city poor to the country poor, and so much with, I think, mobile home park investing and why people maybe stay away from it. And I'm curious what you think too. It's like that stigma of like owning a trailer park, and people don't understand that. Yes, these are like blue collar Americans, but I mean they have a pride in their community and where they live. I'm curious what you think in regards to, and to kind of just back up here, if you could just kind of briefly go over, I mean, mobile home park investing in general, park-owned homes versus tenant-owned homes, private utilities versus public utilities, for the viewers who don't know.
There's a lot to be said for home ownership, whether it's a stick-built home or a mobile home. When someone is invested in a large asset like that, all the stats show they take care of it better. They pay their bills better. They pay their rent better. In general, they have higher credit scores. It grounds them much more in the economy. So for us, when we bought that first park in Greenhaven, it was all resident owned homes, no park owned homes. Now, since then, obviously that park is, it's a gorgeous, beautiful park, and it's kind of one of our showpiece parks. Since then we have bought a lot of parks that certainly aren't as nice as that. They certainly have more park-owned homes than that. But that's kind of the nature of the business. You can't have all showpiece parks in your portfolio. I mean, I guess you could, but it's very, very difficult to assemble something like that. So we certainly like resident-owned homes much better than park-owned homes. But again, it's kind of the nature of the beast. If you want to get ahead, fill lots. Cut your vacancies. You got to have some park-owned homes. Right now we are in 2019 we brought in 75 homes. 2020 we brought in 100. 21 we're on schedule for 200, and then 22 we're probably going to be around 300. In years past, up until recently, we've been renting about 7 out of 10 of those homes. We've actually decreased that a little bit. Now we're around 6 out of 10. And we want to get to 5 out of 10 by the end of 22, and then just keep chiseling away at that to hopefully get down around 2 or 3 rentals out of 10, and the rest be home sales because of those statistics that I mentioned earlier.
Yeah, absolutely. And I'm curious what you think too along the lines of utilities and what your portfolio looks like with public utilities versus public utilities. Do you guys only touch public utilities, or do you guys do private as well? I'm curious.
We do both. I mean, again, public utilities are certainly the most desired utility structure. We love public water, public sewer, but at the same time, we're not afraid of private utilities. We try to draw the line with public water, but again, we do have quite a few parks that have wells. And we just have to do which we do. We have to do our due diligence to make sure we have a good operating well. That's been inspected by one of our third-party vendors during our due diligence process, and then of course we do the same thing for the septic or wastewater treatment systems. So we actually have every type of private septic wastewater treatment that's out there. We have a lagoon, we have some septics, we have and we have some wastewater treatment plants. So we're certainly not experts on all of them, because we have third parties that handle the maintenance and the operation of the wastewater treatment plants. But we're certainly well versed enough to know what potential issues might be out there.
Yeah, absolutely. I think it just comes down to and I'm curious again what you think, if the proper due diligence is being executed, and maybe not being subject matter experts, but aligning the right people to the right problems, having the right experts inspect them. Risk can be mitigated even with private utilities, like something like a lagoon. With the park, I'm curious, people swear off the lagoon. I mean, at that specific park, have you ever had any issues with that one specifically, or does it function pretty well and you guys have no issues?
We have not yet, but that actually is one of the parks that we just closed on Friday. We did do our proper due diligence, of course, to make sure that the big thing with a lagoon is that it's not filling up with solids, because obviously if it fills up with too many solids, there's nowhere for the effluent to go. And it's really just an evaporative process. So we did do our due diligence. We had it inspected by a licensed wastewater treatment operator, and nothing came up as issues. We have a current speedies permit, which for those outside New York State is the operating permit that all wastewater treatment systems have to have. Here, I'll show you a picture. Actually, it's pretty funny. So, I talked about the depth of the lagoon. I don't know if you can see. Yeah, you can probably see it.
Yeah.
Here's a picture of my brother, Brian, who's our current COO. So what it says is, I know it's a little hard to read. It says, when life gives you crap, float above it. So that's Brian in the lagoon, checking the depth in various spots throughout the lagoon. So again, we go above and beyond to make sure our due diligence is done properly. But on a serious note, what we found is that the depth was well within where it should be based on the age. And again, it was, we don't have any issues with it. So
when you got the chief operating officer out there in a rowboat in the lagoon, I think Cook Properties is doing it right, Jeff. The team's heading in the right direction, brother. That's crazy. That's
why our property manager had to snap a picture of that. So Brian was a little nervous because he said there was a little bit of water coming in the boat, of course, and but he was able to still get his measurements and get out of there before it took on too much water.
That's crazy. The next question I had for you, and I'm curious, when people look at the amount of affordable housing in America and the affordable housing crisis, I mean, do you agree that there is an affordable housing crisis? I know there's a lot of conversation around that when it comes to mobile home parks and why it is such a great investment, because there is such a limited amount of housing for maybe C class, D class, B minus class tenants. What are your thoughts on that? And do you think the government's doing anything to solve the problem, or what do you think is the solution? I'm curious.
Without a doubt, there is certainly an affordable housing crisis. As we know, the gap between the I don't even want to say the wealthy, but just the upper middle class and the lower class continues to widen. It's getting more and more difficult for folks that are making $20-$25 an hour to afford a decent house, and that's where mobile homes come in. We can cite a brand new 3-bedroom, 2-bath, single wide, just under 1,000 square feet in a park. For 50 to 55,000, depending on the location, and there's nowhere in New York State, or for that matter, most places in the country, where you can go to find that type of housing at that price. That's brand new. That's Energy Star. That they have their own lot. They can drive right up to their house. Unload their groceries. They don't have to park a quarter mile away, go upstairs, take an elevator. I mean, we really see it as the future of affordable housing. And I can say, and I like to say affordable in quotes, because, even housing that is in that 150 to 200 grand, for a lot of people, that's affordable. I know here in upstate New York, in the Rochester area, some brand new stick built homes are at a minimum are starting at 250, and that's 1,500 square foot 3-bedroom house. And like I said, we can do really beautiful housing for 150. Nice double wides. Paved roads, and it's something that we're actually looking into getting going here in the very near future.
Yeah, I mean, I think that, I agree that gap is just widening, and there's just always going to be a demand. And obviously, I mean, I don't know if we have talked about it, but they're not building any more mobile home parks. I mean, it is a finite asset class, or at least it's very difficult to develop them.
It's very difficult, yeah. We're looking. We actually have a few hundred acres under contract right now in the Rochester area that we are planning to build mobile home parks. We have not got approvals yet, but we're working on them. Again, it's a matter of, we got two big factors that are limiting brand new mobile home parks. One is the government, municipalities, and then secondly, that's sort of related, is NIMBYism, which is not in my backyard. No one wants a quote unquote trailer park in their backyard, and part of that is our job as landlords and mobile home park owners is to change that perception. It has been gradually changing, but we can always do more. If we run our properties the way that they should be run, and we run them as properties that we're proud of, like we do here at Cook. Eventually that will change, and the quote unquote trailer park will be a thing of the past.
Yeah, I mean, that's just frustrating when I hear people say that, because I just know if you and Brian are going to develop or do something along these lines, I mean, these are going to be very nice homes, manicured lawns. It's really going to be, adding value to the community, and again, solving that affordable housing crisis. So from my side of the room, or my side of the table, it's frustrating when I see municipalities push back on that. And kind of a follow-up question as like we segue here, and I know you're sick of answering this, Jeff, and I've listened to so many podcasts to prep for today. We're an empire. We're both from the Empire State, brother. It's a very, very, very tenant-friendly state. What would you say to investors out there, or what are your thoughts in general on the laws of rent control, the eviction moratorium, which New York was one of the few states that extended it at the state level through the new year? I mean, how do you cope with these policies, and what are your thoughts on investing in New York and the Northeast in general?
We love New York State. We were born and raised here. We, granted, it's much more difficult to do business in New York State, but we're so used to it. It's just a daily event for us. We continually, keep in touch with Albany, and, make sure we know what's going on. Just to try to stay ahead of the curve. I'm on the ballot to be elected to be one of the board members for the New York State Housing Association in a couple of weeks. So if anyone's listening, that's one of the members of that group, please vote for Cook. So that will certainly help to get a seat at the table. After this large acquisition, we'll be the largest park owner in New York State. So we know that that's certainly going to have some pull, some power, some sway with the state, because again, we'll be the largest owner in New York State, and we have something to say. We know the operations, and we want to express to them what their pending legislation, how that's going to impact not only us but really the residents. Again, New York State's difficult, but we're so used to it. We're able to we're very nimble. We're able to make changes as legislative changes are made.
Yeah, I mean, when I tell people whatever, we're buying this in New York State, people cringe, people laugh, people are like, "What are you doing?" And I'm curious what you think too. But I would say, like, when people look at the declining population in New York State, I really think it's focused more on New York City, where you or I invest more in upstate and central New York, which some of the communities up there absolutely thrive, and have actually more people from New York City have driven up to that upstate area. And I'm curious what you think on the concept also of the 3% rent control. What we've seen actually is like it gives us that right now to raise the rents 3%, and there's not so much of an issue or anything like that. Like, what are your thoughts on rent control? I mean, have you guys had issues with it in your own communities, or what are your general thoughts?
Yeah, so take the first thing there on population. It has been declining. It's been relatively stable recently. A lot of the population decline has come from New York City. And also too, it's kind of all real estate is local. We have parks all throughout New York State. We have waiting lists for our new homes. We've ever since I bought my first park here in New York State, we've never had an issue with vacancy. If we have a vacant home, we're able to fill it in relatively short order. It's just, again, it's never been a problem for us. With the population decline, again, it's mostly coming out of New York City. And also to that, too, I think a lot of our residents are coming from inferior housing. There is a lot, New York State's an older state. It was one of the first states that was settled, way back when. So there's a lot of older housing stock. We have some parks that are in sub-secondary markets, populations maybe around 50,000. If we had, no matter how many homes we put in there, we would fill them up, because there's no good housing for residents who need affordable housing. So I think a lot of it, we're taking residents from inferior housing, which, that's competition. We provide a better product at a good value. So, they should come to us, and they're happy residents to get the value housing that we can provide. As far as rent control, we weren't happy about it, of course, but again, we were able to, make the appropriate changes. To be honest with us, it was actually, I don't want to say a positive thing, but it wasn't bad. prior to rent control, we were raising rent every other year in that 2 to 3% range. So now, because we never want to get below market, we'll raise 3% every year, regardless. And again, we just always want to stay on top of the market, because if we miss a rent raise in a particular year, we'll never get that rent raise back. We also have the ability to raise above 3% if there's some extraordinary factors such as capital expenditures, inflation, and such. We just have to be able to document those additional expenses.
Yeah, absolutely. I mean, I love kind of seeing that opportunity of where it's like, hey, now we have this, potential to raise it 3% every year to kind of leverage it and stuff like that. And also, I think to kind of just wrap up this conversation, and again, I'm curious what you think with all these, eviction moratoriums, rent control, and stuff like that. I mean, do you as an investor believe that you see less competition, looking for these parks in New York State, in looking for deals, as opposed to people, looking maybe in the Southeast or Southwest, maybe you see a little bit higher cap rates in New York than you see down South? I mean, do you agree, disagree? I'm curious.
Oh, 100% agree. I think our cap rates in New York State are anywhere from 1.5 to 2 points higher than they are outside of New York State, because of the tenant-friendly laws. It keeps a lot of operators, national and regional operators out in New York State. Me and Brian, we've been successful here in New York State for the past almost 25 years. So again, we're used to it. We're okay with New York State. Someone needs to provide affordable housing in New York State, and we're happy to do so, to provide that affordable housing, quality affordable housing, and make money at the same time.
Yeah, absolutely. And I know to kind of segue here, I know you guys just closed out this Fund 20, but I think this was such an incredible opportunity. I mean, it was $26 million. I'm curious, just for the viewers out there. And again, I know you guys just closed it out, but I'm sure you'll have another one sometime in the future when you guys look to do another large raise. What was the structure of the Fund 20 like? I mean, what was the type of returns? What were the properties in it and the deal criteria to be in the Fund 20? I'm curious.
Yeah, so we closed the fundraising for the Cook Properties Fund 20 back in August, and we just actually closed on the last of the 3 parks on Friday. So it was a difficult closing, but we got it done. So we're happy, ready to move forward on those. The deal metrics we're starting off at 8% cash on cash. We'll bump up here probably by the end of the year. We'll be around 10%. And then we go up about a point or so a year for the remainder of the 10-year hold period. The metrics, generally we were looking for, parks of, 70 pads or more. We hit all of those. We were looking outside of New York State, but we were able to find what we wanted in New York State. So we did stay only in New York State and only mobile home parks. So we ended up with 12 mobile home parks, 1,500 pads, all in upstate New York. So they're all closed. They're all under our operational control and management. And we're super psyched because there's a bunch of upside, a lot of some vacant, not a lot, but some vacant pads that we can fill to really drive our operating income.
Yeah, I mean, that's awesome. I mean, 10-year hold, 1,500 pads. I mean, literally so much upside from the, largest, most sophisticated operator in New York State. I mean, it's going to be a home run for your investors, no doubt, which is awesome.
For sure. Yeah, we're super happy about it. And, going forward, we have, someone asked me the question, actually, I think it was Glenn. He's like, how do you celebrate after Glenn Esterton, how do you celebrate after you close a deal? And I was like, well, we move on to the next one. And that's exactly what we did. So we have now we have another large opportunity in upstate New York. We have 2,300 pads under contract to close by the end of the year. It's a super tight time frame. The seller really wants to close again by the end of the year because of fear of capital gains taxes. So we're raising, this was even a little bit bigger, $45 million in 30 days from now. Close the funding by November 15th and close on the deal contractually December 1st. So, we're super busy trying to raise the money and, talk to as many people as possible about the acquisition.
Absolutely. And what's kind of the big details? I mean, how many parks? I think you mentioned in the beginning, if I'm correct, 2,300 pads. How many total parks? I mean, is it all just strictly New York State or across the Northeast as a whole?
It's all New York State. Most of the parks are within an hour. It's a real I don't want to say easy, but it's a real comfortable, large acquisition for us. Most of the parks are within an hour of our headquarters here in Rochester. The metrics on this one is we're starting off just under 10% cash on cash. And again, we get up to the high teens by the end of the hold period. Our projected IRR is about 15, just under 15.5%. So again, some great deal metrics, and the primary reason that we can get there is through infill. It's a great portfolio. There are some smaller parks, but as a whole, it's again a great portfolio. It's something that the seller has been assembling for 20 plus years. Very good operator, just someone who's looking to retire, cash out and move on. The other really big advantage of this portfolio is that it's operating. It's an operating business right now, and we're going to incent all the employees to come aboard to cook. Once we close, their current COO has already accepted an offer to stay with us, which we're super pumped about because he's been running the company for 20 years, and he's going to be a super valuable asset to us as we merge these two companies together.
This is just incredible. I love how it's in your guys' backyard in Rochester, New York, too. I mean, this is a no-brainer for you guys. I'm curious. I mean, when you're building out that team, obviously the COO from this portfolio is going to come on with you guys. I mean, when I go on your guys' website, and I love your guys' website, I'll put a link to it in the show notes. I mean, it's almost like Cook Properties as a family. I mean, obviously you and Brian, you've got your pictures and bios in there, but you've got everybody down to the lowest property, whoever, John Smith, the property manager, or something, and a little blurb on him. I mean, what's that mentality of building that team and almost like that family atmosphere there at Cook? I'm curious.
We really try to encourage that. It is a family. We're still a family-run business. Me and Brian are on the top. But at the same time, we also, probably 12 months or so ago, we realized that, we can't do it all on our own. We had kind of our boots on the ground staff built out pretty well. But in the past 6 months, we started to hire some more senior staff. We hired a director of acquisitions, Max Dowd. We hired our CFO, Scott Mulcahy. We have an accepted offer for a new COO that's going to be joining the company here in a couple of weeks. Brian is being promoted to president of the company. We hired a new senior HR manager to help manage our human resource capital, and she's going to be starting in a couple of weeks also. So again, we're super excited to add that senior leadership to our team. But at the same time, all of our employees are important. But like you said, Jesse, the boots on the ground employees are what makes it happen, and we always try to encourage that cohesion and always letting them know how important they are to us. We do a lot of we say small things, but I think they mean a lot to our employees. We have about 20 people that come to the office for administration on a daily basis. We do bi-weekly chair massages. We have a lady who comes in and does that for us just to help with the stress and a little break. As you see on our website, we always try to have at least one dog here in the office. You can probably see in the corner there's our dog bed for one of my dogs. So that's always great. I mean, no matter how bad of a day you're having, if you see a big fluffy dog running down the hallway, it really is not that bad, and it really brings your stress level from 10 down to 0 pretty quick. We also we do monthly luncheons just to get everyone together and talk about non-work stuff. And me and Brian buy lunch for everyone. And then for our guys in the field, we tell our site supervisors, same thing. If there's an opportunity where everyone's together, please buy them lunch on me and Brian. Take a break, relax. Talk about who's playing football this weekend, that type of thing. Work is super, super important. I love working, but at the same time, everyone has a life outside of work. The other thing that we did for the guys last year is we bought everyone in October, November last year. Is we bought everyone nice Carhartt jackets for the upcoming winter. They got Cook on one side and their names on the other, and it's good advertising for us, but really it's more important for them to look good, feel good, be proud of who they work for, be proud of their parks, because that's all going to translate down to the bottom line. Let's face it, happy residents pay their rent, and happy residents that pay their rent again, comes down to the bottom line. makes us happy and makes our investors happy. So.
Yeah, I mean, this is awesome. I mean, the amount of connections that I can just draw from like my military career, being a leader, being an officer, to what you and Brian are doing. I buy food for my guys all the time, and it's no secret. I mean, take care of the people on the bottom, and like they're going to work hard for you, and creating an atmosphere where people, look forward to coming to work. It's not like, I've got to go work at Cook Properties today. Like, people are probably fired up. Hey, I'm excited to go to Cook Properties. And even like I'm a big follower of you on LinkedIn and Facebook. And I think you guys were like doing a barbecue one Saturday or something like that. And it was like everybody got together and it was just barbecuing outside. It's like, that's what it's about. You know what I mean? And it totally, has an effect on the bottom line, and happy workers are going to work harder for you. So I think that's awesome. I love what you guys do over there.
Agreed. We had our first annual summer picnic back in August.
That's probably what I was looking at. Yeah.
And
awesome.
We had Dinosaur Barbecue, which I'm sure you probably have heard of. I think there's some in Albany, maybe, I'm not sure, but definitely Rochester, Syracuse. Super good barbecue joint. They catered for us. We had people come, because our on-site managers are scattered all over New York State. And we had a couple that came from about 2 hours away. We had actually my first park there in Sandy Creek, our park manager from there came, which, I was super stoked about that. I was so happy that he made the 2 hour trip, they spent more time in the car than they did at the picnic. So that was very, we were very proud of that. We were very touched that all those, all the managers came. We ordered way too much food, so most everyone went home with enough food for dinner and probably lunch the next day also. So that's something we're going to continue to do on an annual basis.
Yeah, I just love that. I love the atmosphere there. I love the teamwork. It's awesome. Cook Properties is doing it right. But a couple more questions before we get ready to wrap up. I mean, obviously the 50-meter target for you guys is getting this 2,300 pads across the finish line here in the next few months. I mean, as we look into 2022, I'm curious, what is the future of Cook Properties? I mean, are you guys sticking to the Northeast and mobile home parks and storage, or what do you see the vision for the next year or two? I'm curious.
Yeah, so our goal here is, again, like I said, once we celebrate a win by moving on to the next challenge, the next deal. So our goal here in the next 3 years is to be at 20,000 pads. So we got a lot of work to do. We still want to continue to buy in New York State. We're not going to stop at 6,300, but we do want to expand outside of New York State. We want to be Midwest, Northeast, down the East Coast. Something that's easy for us to get to, whether it's a day drive or a quick flight on an airplane. We do want to stick with. We don't want to start with 100 pads here, 100 pads there. That's not for us. That's not our model. We really would like to be, if we're going to start off in a market, kind of that 200, 250 pad park. Better yet, we'd love to buy some more portfolios that are already operating with operating businesses and operating employees. That way we can come in and do our tweaks and hopefully make it a little bit more efficient operation. But again, we're super confident to expand outside of New York State. We really feel like we've had the hardest training by fire here in New York State. And once we acquire some parks outside of New York State, I don't want to say they're going to be easy, but I mean, come on, we've done the hard work here up in New York State. So everything else it should be much easier for us.
Yeah, I mean, you guys are getting all the hard work out of the way.
For sure.
You guys are going to start investing in other places, and it's going to be a breeze. This is going to be awesome. The last question I had for you before we wrap up, and then we jump into the bonus round. And it's super.
You didn't
general.
tell me about the bonus round.
There's some Rochester specific questions for you, Jeff. So I'm pumped to get your thoughts on it. The last thing I wanted to hit you with, and I'm curious what you think. Like when we look at commercial real estate as a whole here, nobody has a crystal ball, but really coming out of this COVID era where the government did inject so much liquidity into the economy and stuff like that. I mean, do you still see, commercial real estate as a whole being a strong investment over the next several years? I'm curious.
I think certain sectors of the commercial real estate industry, like most people, I'm not hot on office or retail. I don't know, but you could go the way that Warren Buffett says, come in, buy when people are selling. But again, I don't know. I just don't see it. We have some office assets that, some we're keeping. We are trying to unload some of them. We have some retail that we are also trying to unload. Some of the office retail that we do like personally here in Rochester is stuff that's smaller. We do have some office complexes that have a lot of small offices that are have done very well through the pandemic. People are, even if people are working from home, sometimes they still need a small one-room office, and we've been able to fill those pretty well here over the past couple of years. Self-storage again is another hot asset class. We do like storage. We like storage here in our hometown of Rochester. It's easier for us than having storage. It's not our thing. Mobile home parks are what we're best at. We just closed a deal up in Watertown, New York. We love the market. We have several parks up there, but we had 1,500 units up there that we just sold, and we got an offer that we couldn't refuse, and so we took it. But again, we're keen on storage here in the Rochester area, something that we can run much easier from our own office. But to be honest with you, we love mobile home parks. We think they're by far the best asset class out there. The stats support it. They've done, ever since I have purchased my first mobile home park, they've done nothing but increase in value. Some of our parks, we've refinanced them like 3 or 4 times in the past 10 years. So stick with mobile home parks. I think it's really difficult to get hurt.
Yeah, I mean, you've been doing this for, like you said in the beginning, 2.5 decades in mobile home parks for probably 13, 14 years. I mean, You've never had a park not increase in value. I don't know what other could be a home run for an investor out there that's looking to place cash right now.
Yep. And we've never sold a mobile home park. We've never, we bought a few parks. A good example, we bought a few parks a while ago, and there was one, it was a small one, it was like 5 pads. And we said, well, because we had to buy it all as a package, we'll buy it. We'll put a couple more homes in there, fill it up. And we did so, and we still own it. And that was like 5 years ago. I mean, even though it's 5 pads, what are we making? A couple $100 a month. It's just, it's all set. It's ready to go. We're paying down the loan. So we're increasing our equity. Definitely. Mobile home parks are definitely the way to go.
Yeah, that's awesome. I got a couple, just one or two more things I got to hit you with before we wrap up here, and they're not real estate related, so we can take a break from that. But being from the Rochester area, Jeff, and for all the people who aren't from Rochester out there, I'm curious your thoughts, and maybe this is overrated, but the concept of the garbage plate. I mean, could you give me a breakdown on what exactly it is? What is the perfect garbage plate to you, and where do the locals in Rochester go to get the garbage plate? Maybe not where the tourists go. Like, I'm from Albany, I'd be there as a tourist, but where do the locals, Jeff, go? I'm curious.
So the garbage plate was invented by a man by the name of Nick Tahoe's, and so there's a restaurant down on West Main Street, just outside of the Central Business District. I think it's still open, but I know they were looking to sell the building. The area kind of fallen on rough times a little bit. But that's where it was invented. That's where we used to go when we were in college. After we were done at the bars, we would go there to get a garbage plate at 2, 3 o'clock in the morning, because way back then they were open 24 hours a day. So that was the second part of the night, and it was always a quite the pleasure. You'd always see something interesting down there. But so a garbage plate is you get your choice of either 2 hamburgers, 2 cheeseburgers, or 2 hot dogs. You can also get a red or a white hot, which, as many know from upstate New York, is either a beef hot or a pork hot from Zweigel's, which is again a local hot dog manufacturer. So you get your choice of meats. You can mix and match. You can get cheeseburger, hot dog, hamburger, hot dog, whatever you like. Then actually too, they do a whole bunch of other things. You can do grilled cheese. You can do fish. You can do pork chops. Pretty much any type of protein you want. And then you get your choice of mac salad, baked beans, French fries, or home fries. And then they put all that on first, and then they put the meats on top, and then they cover it with whatever you want. I always get everything, which would be, onions, ketchup, mustard, hot sauce. Some people get some pickles on it. So hence the name garbage plate, because it's really just kind of everything thrown on top. But now there's probably, most restaurants or diners, you can get a garbage plate now. And, most of them are really, really good, but the original is definitely the Nick Tahoe's.
That's awesome. Yeah. Like I said, I'm a tourist, Jeff. I don't want to go where the tourists go. I want to go where the locals go. The guy's born and raised in Rochester. I'll have to check that out.
For sure.
The very last question before we end here, and I always hit this with everybody, and I'm super curious about your answer because I think it's going to be unique. But I mean, Jeff, you're living the perfect life. If it's going on right now, 5 years from now, 10 years from now, I'm curious. The perfect life for you. I mean, what does that look like?
I'm living it. I mean, I really enjoy working. I enjoy what we're doing. I'm enjoying, as my brother would attest to the same thing. We enjoy running the business. We enjoy running mobile home parks. That's what we started off doing. We enjoy the challenge. I've always never backed away from challenges. Even more, as important, obviously, we enjoy making money, but as important as that is, that we're providing quality housing for our residents. When I get a phone call from a resident and they're not happy about something, or just something that hasn't been maybe addressed quick enough by a property manager, I still take that personally. And it's difficult for me to get those phone calls or those emails. So again, we always try to do the right thing, and I always want to be proud of our product. I never want to be ashamed of going through a park. When we do our tours of parks, if there's an issue that we see, we want it addressed right away. Again, because we do want to provide that quality, affordable housing. In addition to work, and even more important than work, I have a son who's about to turn 16 and a daughter who is 13, and right up there, number one, right above work is watching them play sports. I got a beautiful wife who's a teacher here in the local area. So I would say I'm definitely living the perfect life right now. I couldn't be happier. Me and Brian talk about what's going to happen in 10 years. When in 10 years, our kids will be out of college. And at that point, we'll reevaluate. I know me and Brian aren't going to be sitting on a beach, that's for sure. We'll want to continue doing cash flow type investments. And I'm sure it'll be in the mobile home park space.
Yeah, that's awesome. I mean, that's just a huge why. And again, the atmosphere that you and Brian have created over there at Cook Properties is world class. I mean, there's no doubt about that. For people who want to hear more about you, Jeff, I mean, might be interested in investing in this upcoming opportunity. I mean, best platforms to reach you on, best ways to get a hold of you. I'm curious.
Sure. You can always call me. I'm available anytime. 585-233-4699. My email is jeffcook@cookpropertiesny.com, and our website is cookpropertiesny.com.
Awesome. We'll put links to all that in the show notes. And again, I encourage everyone to go over and check out your website. It's a really, really professional website, and just an awesome, gives you that family dynamic and atmosphere that you guys have over there at Cook. So I appreciate your time, Jeff. Again, I know it's a Sunday morning and we had to pull some strings to make this get together, but there's no doubt in my mind, from hearing your story from 1997 to 2021, it is an incredible story. And you will go down as I think one of the top investors in New York State and in the Northeast whenever this comes to an end. But I appreciate you and everything that you do for the affordable housing space, and how much value that you and Brian add is incredible. So I can't thank you enough for taking the time today.
Of course. Thanks, Jesse. You're much too kind. And we're not going to stop. So 22 should be even more of an exciting year than the past 25. So
awesome. Thank you again for your time, Jeff. I appreciate it, brother. And I will catch you later.
All right. Have a good day. Thank you.
Hey, thanks again for listening to the Wealth Science Podcast. Take some time to subscribe and leave us a review. It really is the basis that helps us continue to bring on amazing guests each week. We have another incredible story to share next week, and I'm certain it's going to add value to this community. Please do not hesitate to reach out if there's anything I can do to help you in your journey of attaining financial freedom. Thank you again for listening, and we will see you next week.